The trends in global investment have been volatile with the rise and fall in global crude prices, policies, and challenges of international trade. Where will the pendulum swing in favor of Africa? Welcome to Market Square. I remain Francis Ogo. We will take you on our topic for today shortly. Stay with us. Welcome back. It's no longer news that Nigerians woke up to the news of the crash of a Ponzi scheme, crypto bridge exchange, popularly called CBEX. This news literally shut down most businesses and rippled investment plans of many people. The digital investment platform offered investors 100% profit after 30 days of online trading, and no fewer than 600,000 Nigerians reportedly invested in the scheme and lost 1.3 trillion naira after it collapsed. Observers say the shock will continue to shake the investment atmosphere in the country after a series of failed Ponzi schemes. The question is, have people really learned their lessons? What is the probability that a new Ponzi scheme would erupt from the blues and hit the rocks again? Funny enough, the publicity of some of these schemes are driven by influencers and celebrities. On this episode, however, we'll give you tips on how to identify a Ponzi scheme before putting your money into them. Don't go away, we'll be right back. Welcome back. Firstly, Ponzi schemes thrive on two major ingredients: ignorance and greed. The masterminds behind them promise unrealistically high and inconsistent returns, which are far beyond what genuine investments like mutual funds, real estate, or treasury bills can deliver. To make their scam look legitimate, they often cloak in complex jargon, pseudo business models, or fancy presentations that confuse rather than clarify. Many take a step further, leveraging religion, community affiliations, or the influence of popular figures to build credibility and manipulate trust. And when early investors, often friends or family, appear to make quick profits, skepticism gives way to blind faith. The first rule when evaluating any investment is, if it sounds too good to be true, it probably is. Ponzi schemes typically promise unrealistically high returns with little or no risk. In the world of finance, risk is inevitable. All legitimate investments, whether in stocks, real estate, or bonds, carry some degree of risk. A genuine investment opportunity may offer solid returns over time, but it will never guarantee an endless, risk free profit. If you hear someone boasting about returns that are significantly higher than the market's average, especially without detailing how the money is made, be skeptical. In fact, if an investment offers more than you can reasonably expect from a legitimate venture, it's likely an illusion designed to attract your money. Do your research before parting with your hard-earned money. Legitimate investment platforms are typically regulated by national financial authorities. In Nigeria, for example, the Securities and Exchange Commission and the Central Bank of Nigeria coordinate the activities of financial institutions and can confirm whether a company is legally licensed. When you go through their websites, you would find relevant details. When you also look into investment, ask yourself, where is the proof of their business model? How do they make money if it's not coming from new recruits? If the company cannot provide clear, verifiable information about how it generates income beyond participant fees, it is likely a Ponzi scheme. Many people overlook this simple yet crucial step and end up losing their life savings. Another classic sign of a Ponzi scheme is the focus on recruitment. In Ponzi schemes, the real money comes not from actual business operations, but from the new money invested by recruits. If you are promised commissions or bonuses for signing up new investors, you are likely being drawn into a pyramid structure. These schemes rely on constant new recruitment to keep the money flowing. And once the influx of new investors slows down, the entire operation collapses. This is what happened in the MMM debacle, and it's currently happening in various schemes like CBEX. When recruitment becomes the main source of income, rather than selling a product or providing a service, you should immediately question the sustainability and legitimacy of the platform. In today's digital age, many Ponzi schemes have adapted to hiding behind the umbrella of cryptocurrency and forex trading. While both of these are legitimate financial markets, scammers exploit their complexity to confuse investors and seem credible. Ponzi operators will often promise extraordinary returns from crypto investments or forex trading without explaining how it works, which is an immediate red flag. While there are legitimate businesses in these sectors, scam platforms often operate without regulation and prey on the excitement surrounding digital currencies. They might ask you to invest in a new crypto or exclusive forex opportunity, offering huge returns. However, legitimate crypto and foreign platforms are transparent, have clear business operations, and are regulated by financial authorities. If the company cannot explain its operations or is overly secretive, it's likely a scam. Don't be carried away by glowing testimonials or social media posts claiming easy profits or success stories. In many cases, the early participants in Ponzi schemes are paid with the money invested by new recruits, which creates the illusion of success. These testimonials are not proof of legitimacy, they are simply part of the marketing strategy to draw in more victims. Fraudulent platforms may feature stories from happy customers who made thousands in just a few weeks. But once the recruitment slows down, those very investors lose everything. Instead of relying on testimonials, look for audited financial reports or regulatory oversight. A legitimate company will have clear, verified financial statements that show how profits are made and where the money is coming from. When you notice that payments are delayed or that the company is constantly offering excuses for why your withdrawal isn't processed, it's time to act. Technical issues, system upgrades, or pending approvals are classic stalling tactics used by Ponzi schemes when they are on the verge of collapse. Once the money coming in from new recruits no longer covers the payouts to earlier investors, the scheme falls apart. It's crucial to be vigilant at this stage if the company is consistently postponing withdrawals or giving vague explanations for payment delays. Is a clear sign the business model is unsustainable. These excuses are often used to buy time as the company prepares to shut down. Ponzi schemes often rely on psychological pressure to get people to act quickly. If you hear phrases like, "don't miss out," or "this is a once in a lifetime opportunity," take a step back and think carefully. These are emotional manipulation tactics designed to make you feel like you'll regret not participating. Many scammers play on FOMO, fear of missing out, to push people into rushing decisions without doing proper research. Take your time. Good investment opportunities are built on facts, not fear. Always remember that an investment that requires urgency is likely too risky or fraudulent to be worth your time. Building wealth is a long-term process that requires patience, planning, and informed decision making. There's no shortcut to financial success. Ponzi schemes, however, lure people with the promise of quick profits, often in just a matter of weeks or months. Unfortunately, the quick gains are rarely sustainable, and once the scheme collapses, the losses are often devastating. If an opportunity promises fast returns with little effort, it's usually a sign that it's too good to be true. Sustainable wealth is built over time, not in a hurry. The most important defense against Ponzi schemes is financial literacy. Educate yourself about how investments work and how to identify potential scams. Always ask questions, research thoroughly, and verify the legitimacy of any platform before you invest. If something feels off or too good to be true, it's better to walk away. Informed decision making is the key to protecting your finances and building a secure future. The promise of quick wealth might sound tempting, but the long-term consequences are not worth the risk. In a world where the promise of quick riches often beclouds judgment, it's essential to approach any investment opportunity with caution and diligence. Ponzi schemes thrive on the allure of high returns, the lack of transparency, and the pressure to act quickly. However, by staying informed, conducting thorough research, and being skeptical of promises that sound too good to be true, you can protect yourself from falling victim to these scams. Remember, building wealth is a gradual process that requires patience, knowledge, and informed decision. Legitimate investments come with risks, but they also offer the potential for sustainable returns over time. By staying vigilant and prioritizing financial literacy, you ensure that you make decisions based on solid principles, not the fleeting temptation of fast money. At the end of the day, there is no shortcut to financial security. Be smart, be cautious, and always trust in the power of knowledge to guide you towards safer, more reliable investment opportunities. Let's take this break, and when we return, we'll look at the numbers. Welcome back. And on our numbers, on Wednesday, April 30, 2025, one US dollar exchanged at 1,603 naira 19 kobo, which implied a 1.21 naira gain against the dollar. On the first day of May, the US dollar had traded at 1,616 naira 35 kobo. Similarly, as of today, the 6th of May 2025, a euro exchanged at 1,816 naira, while the pound exchanged at 2,130 naira 69 kobo. On cryptocurrencies, the global crypto market capitalization in $2.92 trillion, which signifies a 0.9% decrease over the last figure. As of today, the Brent crude oil price is 66.95 US dollars per barrel, while West Texas Intermediate WTI is trading at 59.21 per barrel. These prices reflect the latest market conditions. And that's where we wrap it up on today's episode of Market Square. Until next time, don't forget to like, share, and follow us on all our socials. Stay safe.